Hi ladies and gentlemen, this is Game of Trades and this is going to be a technical analysis of the S&P 500 index. So the markets have been rallying relentlessly for the past few weeks with a more than 15% rally. So even if you are 100% bullish in the S&P 500, it is only normal to expect a healthy correction right about now. If you are investing in the S&P 500 going long right here after such a big powerful move up, after such overbought RSI conditions, well, you are probably not making a very wise choice. That being said, this is definitely something to consider. This is a huge bullish move and definitely a very good check mark if you are bullish on the S&P 500. The breakout to all-time highs was nothing but impulsive, nothing but bullish, and definitely chips away at the bearish scenario. If you are bullish in the long term for the S&P 500, you would actually be looking for a correction to a support level and a bounce to continue on the uptrend to higher highs and to continue on the bull market that we've seen for the past 10 years with the S&P 500. Obviously, if you are bearish, you would be looking for more downside and a potential break of this level. This level is something that needs to be defended if you are bullish on the S&P 500. If you are looking to invest in the long term, you do not want the price to go below this level. Now, before I get into the actual video, I will ask you to please drop a like on this video. It does help a tremendous amount to try and show my channel to more people on YouTube. Now, looking at the shorter term, we have seen the markets go into a nice little consolidation zone right here for the past few days. So in the past couple of weeks, the markets have seen little to no gain. A nice little consolidation zone after such a big rally is normal. But the problem is we did break this consolidation to the upside despite the overbought readings on the RSI and the fact that we are printing some divergence on the RSI. You can see right here the RSI is making lower highs right there whilst the price is continuing on higher. This definitely indicates that this breakout of the consolidation zone that we've seen is a false breakout. In fact, I have the chart settings on area, and it's simply because we actually see this a lot better than with the candlestick charts. I'm going to go back to the candlestick in just a few seconds once I'm done explaining this. So ever since the September stock market crash began right here, led into here, we've seen a multitude of RSI divergence at peaks. You can see all the red lines here, one here, two, one here. So you can see a combination of two things were happening every time before a correction or a crash. So first of all, we have the RSI divergence. We have seen the price go up, making two consecutive higher peaks while the RSI goes down, and you can see that the same corresponding spots are actually making a lower high as opposed to a higher high on the price. And so same thing here. This you can argue is not divergence just because the price was actually to the same level, but in my experience, divergence actually applies to situations where the price reaches an equal level, but the RSI goes down whilst the price stays the same. It is divergence too, at least in my experience. And look what happened. We did have a decent size correction again. Same thing here. We have the RSI divergence. And the second thing that we see each time is a break of trend line. So again, here we have the trend line before the stock market crash. Here we have another uptrend line that was broken right during this RSI divergence, and another trend line here that was broken following the RSI divergence. I'm going to go back to the candlestick charts right there. We did print a bearish engulfing candle right here. So if we see more downside in the next few days, it would be indicating a potential topping pattern. Now I also have to mention the MACD is making a bearish crossover right now. This could obviously be a whipsaw signal until we see the clean separation. But again, if we see more downside, if we see a break down below the consolidation level, let's say a break below this 3,251 level, that would definitely trigger some more selling, more impulsive selling to the downside. It would definitely switch the momentum from an upwards direction to a downwards direction, and the RSI divergence would start playing out, and the price would fall. Now, where do I think the S&P 500 is likely to bounce or likely to stop? Now, in terms of targets, I do think that this price level right here is a likely bounce target, along with these levels right here. I think this is also a Fibonacci retracement level, and a potential move down to backtest the breakout of all-time high is not completely out of the question. I do think it is unlikely considering how bullish the market has been recently. Such a big move down all the way to this level seems a little bit over ambitious to me, so it's a little bit too soon to tell how far we can go, but definitely a minimum target all the way to this level from the break of the 3,250 level would be a nice 3% move down. And to the second target, that would be a nice 5% move down. So nice profits for the S&P 500. Obviously not a huge swing up and down, but definitely something to look at. And also potential investing opportunities if you're looking to invest in the S&P 500 in the long term. Now taking a look at the Fibonacci retracement level from the bottom right here all the way to the top, you can see it does align with this target here, the 50% Fibonacci retracement level. So again, this would be if in the scenario where this is just a counter move down, a counter correction all the way to this move here would definitely be a good investment opportunity for a potential bounce to higher highs, higher all-time highs on the S&P 500, again, if you are bullish. Now we're going to take a look at the hourly chart and see some of the more short-term technicals that we can see on the chart. Now this is the consolidation zone that we saw on the daily chart. You can see from the 18th or 19th of December all the way to the 8th of January, we did have very limited upside. So that's a few weeks of side action, consolidation, and we recently broke out of this level, broke out of this consolidation zone and started reversing down. So more downside again, more downside would break this level and send us flying all the way down to the next support level with more impulsive corrections. So that's about all I wanted to cover in this video. I hope you guys enjoyed. If you did, don't hesitate to like and subscribe if you haven't already. I will be making a video on the longer term potential in the S&P 500. I did make a few more bearish outlooks on the S&P 500, and I think a potential bullish scenario in the S&P 500 is definitely something to look at, and definitely something I want to put up for discussion on my channel. I love reading your comments. Some of you leave some very interesting notes that I definitely take a look at. So don't hesitate to comment below what you think. In the meantime, good luck on your trading and see you next time.